hear the sound now because of... Okay.
Okay, good afternoon, everyone. I'm going to keep this presentation short, simple, and sweet. I'm going to be profiling GBPUSD for the upcoming week ahead. So the first thing I'm going to do is I'm going to get rid of all these lines. Here we have a blank chart. I always start on the daily. I always start my analysis on the daily. And I basically look out for a confluence of 3 to 4 things. I look for supply and demand. I look for support and resistance. And then I look for chart patterns, So starting on the daily, or better still, the 4-hour. If we draw a horizontal line here, remember we are looking for demand. You have to look for supply or demand before you progress to the next steps. So here you have an apparent demand level, but we need to scroll back in time to see what must have happened at that region to confirm it's a valid demand area. So we'll go to the daily, we minimize our charts, and then we can see clearly here that 25th of February 2020, price reacted to that same region. We have a drop base rally demand zone. So this confirms this zone as a valid demand zone. So the next thing we're going to do is we'll go to the 4-hour. We're going to look for a change in character, as you can see from here to here, price has been in a downtrend since 11th of August, based on what we can see on the screen. From 11th of August, price has been in a downtrend. So for us to think of buying, price has to change. There has to be a change in structure. Price has to start making a higher lows, and start creating bullish order blocks. So we're here on the 4-hour. Let me leave this. Let me get rid of these lines so we have a clearer picture. So here we are on the 4-hour. We have what appears to be a break of this low. We might call it stop hunt. Then a break of this high. That's a break of structure to show you that price is willing to move upward. And then if you place your trend line, maybe from here to here, yes, you can see that price has broken that trend line. We can extend it even up. You can extend it to this swing high, or okay, let's create multiple trend lines. One from this swing high to this swing high, then one that connects this swing high, and this swing high. So from this, we can get rid of this trend line because we have 1, 2, 3 touches. Price has broken above. Price has also broken above this short-term high over here on the 4-hour. And then you can consider this an institutional candle. An institutional candle can consist of several candles. What it simply means is the last couple of down close candles before the push up. So here we have a couple of institutional candles. The break of this low, the break of this high, and then what we now expect is a return to this order block this other block is the last down close candle before the push up that broke this resistance. So based on all these conferences, you see that, okay, price has every reason to push higher. So basically what we have is we have demand at this region here. We have a couple of higher highs, a couple of higher lows, signifying a change of market structure to the upside. We have a break of the trend line. So now the setup is looking good. So we'll go to the 1 hour. On the 1 hour, we have more candlesticks than on the 4 hour. So if we zoom in, if I zoom in, you can easily see that within this cluster of candles, this push upward broke this high and this high. And the last bearish candle before the move upwards is this doji, or whatever you want to call it. And then if we bring out our feed tool, feed from the low to the high, we can clearly establish that this area is a 78.6 feed level. So this is a prime level for your buys to take place from. So this is where I'll be looking at. I'll be looking at this region for something like this. This is the chart pattern I'll be looking out for, because I always prefer a confirmation entry to a risk entry. So this is what I'll be looking out for once price gets to 78.6. This is what I'll be looking for, preferably on the lower time frame, preferably on the 15-minute time frame. So we're expecting, what we'll see is we're expecting price to push down from up here, down here, and then from down here, price will take off and look for the nearest supply region. On the chart, where on the 4-hour, we have the drop. This is a drop, base, drop, supply zone. And this is the last up close candle, the last bullish candle before the move down. So this is a likely place for price to push up to. Then beyond that, we also have this other block here. We go to perhaps, let's go to the 8-hour. It's also a drop, base, drop, demand zone. Let's clear some of this. Good. Let me go back to a blank chart so you can see that better. Okay. Let's look for. Okay, good. So here you have the 4-hour order block up here. It's clearly a drop, base, drop, supply zone. The other block is a valid order block. It hasn't been mitigated. Then further down, you also have another drop, base, drop. So you have two valid supply zones. This is one. Let's use the 4-hour. That is one, and that is one. So what I'm expecting is this. Price is going to pull back in, and then from there, it's going to push to the upside. If it breaks this region, then it will continue. And from there, if you see any form of weakness, it's going to drop. Any form of weakness here, it's going to drop. In the general downtrend, remember this is a downtrend. So this is reversal. So those are the scenarios. So the first scenario is, let's get us to pull back here, and we're going to look for a buy into the zone. That is what we're going to look for initially. A pullback into this other block, a change of character, and then price would move. Price would move up to mitigate this other block. Now, if we go to the 15 minutes, what do we see? We see that this is a push up, followed by a push down, followed by another push up. And then we're left with this other block here, this other block. Now, when price came down, price did not respect this other block. Price broke through the other block, thus establishing this other block as a breaker block. A failed other block is known as a breaker block. And then on the 30 minutes, we have the same thing. This support region was broken to the downside. This other block was broken to the downside on the 30 minutes and on the 15 minutes. So it shows that price has a potential to move to the downside because this other block has been breached and this short-term support has been breached. So what I'm trying to establish is, since this is what we're waiting for a push to the downside, before a move up. On the lower time frame, if you know what you're doing, you can sell into this other block. Once you get into this other block, you take your profit and then you wait for a buy in the general direction we've been waiting for. So what we'll see on the 15 minutes is a break of this structure. If we use our trend line, you can see that price has broken the trend line, price has broken the neckline, and then if we pull out our fib tool, yes, we'll see that the 61.8 aligns with this, the last bullish candle before the move down. This other block aligns perfectly with the 61.8 level. So there's a possibility that once price hits the 61.8, once it hits the 61.8, it's going to now drop down into the demand zone where we now look for buys. So if you know what you're doing and you know how to scalp, you can scalp this move downwards into this demand area where we're waiting for a buy. And the reason why we're waiting for a buy, let's go back to a blank chart. The reason why we're waiting for a buy is because this is a stop hunt. Let me, if you, maybe let me take out the time to label this. This is what you call the stop hunt. Then followed by the break of structure. And then the next thing you expect is a return to this other block. RTO. RTO. And then price would now make a push to the upside to mitigate either this other block here or the one here, or this other block here, because both this hasn't been mitigated, this hasn't been mitigated, but this one up here has fair value gap. There's inefficiency here. There's inefficient price to be filled. So something that looks like market cycle. Market cycle has 4 phases. We draw a box here. You have consolidation within the box. Let's consolidate. This is consolidation. That's the first phase of the market cycle. Then there's expansion. That's the second phase. Then there's retracement. That's the third phase. After the retracement, you have what? A reversal. So most likely, price can move to this upside and mitigate this last bullish candle before the move that took out this low, and this low. Price took out multiple lows, 1, 2, 3, in the process of expansion. So this is classic market cycle. So anyway, the market always does what it wants, and then if the trend is strong, it most likely won't get to that region. But what I do know is we have a valid buy of this for our other block based on 3 things. SNR, that's supply and resistance, support and resistance. SND, which is SND, supply and demand. SNR, support and resistance. And then you have your quasi. Yes, this is a quasi or an inverted heads and shoulders. Let's go back to the plan chart. This is the head. This is the left shoulder, and that is the right shoulder. So this is, you can call this a quasi, inverted heads and shoulders, whatever. So the 3 things we have here, we have SND, we have SNR, and then we have QM. You can call it Quasimodo or Quasimodo level, or you can call it inverted heads and shoulders.
Hello, sir.
Hold on one moment. Heads and shoulders. So this is the combo. You must have the confluence of events. So these are the three basic confluences that gives me the confidence that price is going to return to the right shoulder of the heads and shoulders, or the Quasimodo, or whatever you call it. Price is going to make a pullback into this other block, and then it's going to take off from there. So that's, just keeping it short and simple. And then when it gets to either of these regions, you narrow it down to the 50-minute. I always like confirmation entries. I rarely take risk entries. So for a sell, you're going to be looking for something like this on the lower time frame. I beg your pardon. I'm going to be looking for this. Sorry, I'm kind of old school. I haven't fully integrated myself into trading view, so I'm still much of I'm transitioning. So excuse my use of MT5. I know most people are on trading view now. So for a sell, this is what you're going to be looking for. Here, here, and then possibly here. Then you can use your fig tool to actually get an idea of how far price would go. So let's pull out our fig tool and see what we can come up with. Okay, this is the candle and book structure here. Let's do it. Okay, so this will be most likely our first target. Yes. Price will definitely get to 161.8. If it breaks 161.8, get to 261.8. So this is going to be our first take profit level, 161.8. And then we'll wait to see what happens in that region. If it gives us this pattern here, it gives us this pattern here on the 15 minutes or any lower time frame of this other block, then price is going to continue down. But definitely this 161.8. Let me remove this. This looks like a very healthy target because we have a drop base drop scenario here. Let's go to the 8-hour. Okay, let's go to the daily. Maybe you see clearly there. Good. So let's go to the blank chart. Daily. This is very clear. We have a drop. Base drop. Good. So this other block right here, is most likely going to be the target. We're going to be looking for the same thing. We're going to be looking for SND, SNR, and quasi, double top, what have you. So the line chart, we're looking for support. This is support. This is a very good support level. So we have support. That's SND. Now we are looking for, we have SNR, support and resistance. This is support. This is resistance. So now we're going to look for supply and demand. So we have support and resistance. This is support, this is resistance. Then we'll change it back to the candlesticks. We are looking for supply and demand. This is a drop. We have SND. Good. So we have the two ingredients for the pepper soup. Then the third is going to be QM, Quasimodo, QM, or you can call it QML, Quasimodo line, Quasimodo level, or you can call it heads and shoulders, or whatever, or double top. But you're going to be looking for this on the 15 minutes time frame, most likely. So once these three ingredients are complete, we have support, we have supply, we have drop, base drop, supply zone. So, and this is on the daily. Let's go to the 4 hour. So it aligns perfectly with this other block on the 4 hour. So this is what we should expect. Price is going to mitigate this other block, and then from there, up there. So that is what I see. So I'm just trying to keep it simple and sweet and not overcomplicate things. So Mr. Greg, do you have any questions? Mr. Audi?
Yeah, good afternoon. Greg Odi on the line. So far, so good. I'll say everything you've explained as the question I wanted to ask was you're expatiating on the support and resistance alignment with the supply and demand, but actually you've already done justice to that. So I would say I don't really have any question, but I was really intrigued because the way you really drilled down is the trade is showing that we're having multiple entries, because by the time you got down to the 30 minutes, I was now seeing that basically there's a possibility that even the price pulling back to the other block we're having down there, so we can have a sell on the lower time frame, scalping trade, before we now get a buy, all things being equal, and also get a sell when it gets to the rally, the supply zone up there. So actually it's like the trade is giving us three opportunities.
Exactly, sir.
Well, you've really done justice to this trade, I will say, and we're hoping to milk the market when the market opens by tomorrow. It's a good one, sir. Appreciate it.
Okay, so okay. So we'll see how the analysis works out by market open, and hopefully London session, New York session. Let's see how the market unfolds.
Well, thank you very much, sir. I really appreciate it.
You're most welcome.
Looking forward to milking the market. So, sir, will you also be doing any other analysis again for today?
Not right now. Not right now. This is. I just want you to have. I don't want any information overload. I want you to focus on this. and then let's see how market unravels itself.
Okay.
Come market open.
Okay. Okay. Thank you very much. I'm very grateful.
It's been a pleasure.